Welcome to another edition of the African Trade Network's monthly workshops and seminars. In case you don't know, the African Trade Network is established to create a network of trade between Africans, the Americas, and throughout the world. So you're in the right place. The goal is to help create jobs through entrepreneurship, helping people to start their own businesses while gaining an understanding of our differences through various forms of cultural exchanges. I just want to welcome everyone who is joining us. To those who are watching later in the recordings, we hope that you will continue to follow the African Trade Network and consider being a member. Today, as always with the African Trade Network workshops, you are going to be uh, informed, enlightened, and our goal is to make sure that you are inspired. This seminar is to help you understand angel investment. And the our presenter today is very well versed on what it takes to start a business, what it takes to find angel investors, and we're going to hear the pros and cons of angel investing. Our guest today, our presenter, is Donald Steiny. He has decades of experience as a software developer, high tech entrepreneur, and investor, and an advisor in several countries. He has worked with regional economic development in Santa Cruz and in Finland, and spoken on innovation throughout the US, in Finland, and in Austria. He's currently an advisor and co founder with six companies, currently a member of the venture capital and private equity roundtable, formerly founded and led Central Coast Angel Network, and was on the board of directors of International Angel Investors. He co founded a group with technology transfer officer of U.S. Santa Cruz that led to the creation of the Santa Cruz Design Center. Don loves helping startups develop a vision and strategy, and he loves helping them get resources and helping them succeed and helping them stay on track and trying to make sure that they don't make some of the same mistakes that he had to learn from along the way. He calls those very expensive mistakes. And he likes guiding them to resources that will get what they need done in the most effective way. Welcome, Don Steiny. Don, thank you so much for taking time out of your busy schedule to share with our audience from your years of experience and your expertise. We are thrilled to have you on the seminar this month with the Angel, to talk about angel investment as part of the African Trade Network. Don?
There's a question that I want to ask you right up front, and I want everybody to think about for just a few seconds. Um, and the question is, if somebody invests in a company, how are they going to get their money back? Like, okay, I invest, it's a software startup which have very low expenses. They don't have to buy inventory, and they can re- basically rent office space at a co-working space, which is very inexpensive. So they have very low expenses. So, a couple of $100,000, can keep a couple people going for quite a while. So let's just say an angel investor says, okay, here's a couple $100,000, finish your software project. Um, how is he or she going to get their $100,000 back? Anybody?
Let's see. We have one person over there, Anyinye,
Yay!
with a hand up.
Yes, hi. Hi, Don. This is Chinyeri. Good
Hi.
morning.
Good morning.
I heard your question, and I think it's simple, it's straightforward. If you invest in my business and you want to know how you get your money back, we go into what is called a partnership, or partnership could be percentage based, but you would have to give me enough. I have to have enough leeway to be able to operate the business and bring out the profit that is desired. And then we split the profits based on the partnership, how we agree.
Okay. That's one way.
Then
Okay,
there's
go ahead.
Tiffany. I'm going to let you hear all the answers done, and then you can
Good, I
address
want to.
Hi.
Hi,
Hey, Don.
Tiffany.
Hello. Okay, so I'm thinking the angel investor can be a private, not a private, a silent investor, where they invest the money, but they don't really control the management or the decisions of the business, or they can have a certain percentage of ownership of the business itself.
All right. Thank you, Tiffany. And then there's Victor.
Hi. I hear people saying morning dawn. I will say evening from South Africa.
Okay. Thank you.
Thank you so much. Yeah.
Thank you.
Okay. Based on my little knowledge of investment, especially from the context of South Africa, this side, when an investor invests money, they will have two options, or they will take. They will choose from two options, and that is either to be a shareholder or a debenture holder. Now, what it means is that if they choose to be a shareholder, they will get a certain number of shares in the company they're investing in, whether it's a majority share of 51%, whether it be a minority share of 49% and downwards. And then the other option will be to be a debenture holder. Debenture holder meaning they will then be borrowing the money to the company, and they will get it back with interest. So they would wait for the time when the company makes some money. The company will pay them, as a loan, something like that. So that's what I would say in terms of the different options that the investor can get their money back.
Thank you so much,
Thank you.
Victor. Don, you're getting some great answers from a very informed
Perfect.
audience here.
Perfect
Queen,
answers.
speaking of being well informed, Queen, you're next.
Thank you so much. Thank you, Don. Everyone has said the right thing, but the last person, Mr. Victor, is a legal man. He already said it. But one thing is why they are called angel investors. They want to leave legacy. They want to leave legacy for their family. Yes, there is an exchange and partnership and all that. But I think their heart is in, they want to make money with interest. But the most important thing that I know about the angel investors is to have that legacy, live for their family forever and ever, generational wealth. Thank you so much.
Thank you very much, Queen. Ron?
Well, one way that you as an investor can get your money back is if I make money. If I don't make money, you're not going to get your money back. If I do make money, then you have a chance with me too.
Thank you very much, Ron. And to all of you who are joining us, Don is making his presentation, but he asked the question, if an angel investor invests in your company, how will he or she reap a return from investing in your company? So Don, you've heard these incredible answers. So behind door number 1, 2, 3, or 4?
Well, I want to quickly kind of bolster what Queen said about a legacy. Oftentimes, I heard once an angel investor say, angel investors don't invest for money. They actually invest because they want to make a difference in the world, and the legacy that they want to have is to be part of creating a Facebook or a Google or something like that. And a lot of times the companies that they invest in don't succeed. I mean, in fact, probably 80% of the time they don't succeed, or more. But and they know that. but going back, I think that we can divide the answers into kind of two piles. One pile is that people get ownership, they get stock in the company. And the other pile is that they basically are, in a sense, loaning the money to the company, and they're getting the money back by getting interest. And the interest may be directly interest on the loan, or the interest is in the form of profits from the company. So they're in a longer term, and perhaps over the longer term, profits in the company. But interestingly enough, neither one of those is the correct answer for angel investors, at least in tech companies and in many companies. The answer is that they get their money back when you sell the company. And so what angel investors are investing in is the company, not the product. And it could be an interesting thing to think about is that the product of Silicon Valley is not tech. That what Silicon Valley makes is companies. And there's two ways that you can sell the company. You can sell it to a bigger company, or you can sell it to public markets. And selling it to public markets is what's known as doing an IPO. In fact, I'd say there's a third way, which is you can sell it to the employees, which is a very cool way of doing it. But that's similar to selling it to the public market. So doing an IPO, and of course the IPO is the most desired thing that you could possibly do with a company. It costs about $1 million to do an IPO. And
So Don, on the simple level, there's a saying in horse racing, I bet on the jockey and not the horse. Speak to our audience today about how critical it is for them to sell themselves, because you just said they're not buying a product. But how critical is it? How critical?
I'm definitely getting to that.
Yeah.
That's I'm moving to that. So what people are investing in is they're investing in the company. So what is a company? What is a company anyway? What does it look like? I mean, when you want to touch a company and feel it, what does it smell like? I mean, companies are completely intangible. Companies are stories that people make up in their heads that they believe. That's why brands are so important, because the brand is the story that you're telling about the story of the company that you have in your head. I mean, Apple has been brilliant at that, because they have this story of quality and that they're of status and on all these kinds of things, so they can charge more for the exact same thing as somebody else, and people are willing to pay it because the story that we have in our heads about Apple makes it worthwhile to do that. So your company is a story. So when you're going out and you're trying to get money, and it doesn't matter if it's from angel investors or from banks or any place else, that story that you're building of yourself is it's what you have to do. I mean, that's what you're building. And I'm going to talk a little bit later about how to pitch things, but I want to get back briefly to the idea of what a company is. And I want to kind of throw out another question, which we ran into here at African Trade Network right in the beginning. And it has to do with another aspect of investment, because I'm talking about angel investment. And when your company starts, how much is your company worth? Like, basically, angel investors are, they're investing in your company, and if you're saying okay, I'm going to invest money in your company, and this company has a certain amount of stock, and based on the amount of stock that this company has, I am going to I'm going to take some of your stock in exchange for me investing some money in your company. And that is something you have to just work out with the investor. You just have to convince the investor that your company, how much your company's worth. And people in Silicon Valley, when something's hot, like I don't know how many people were around during the dot-com bubble in 2000, or there's bubble after bubble in Silicon Valley, where it's very easy if you've got a startup in this particular domain to convince people that it's worth a lot. And so people will invest a lot of money in the particular startup just because they're betting horse race, just like she said. They're betting on this particular horse because they're hoping it's gonna, place and win them some money. So, but basically, it's not worth that much. So early on, angel investors wind up getting a big percentage of your company, but then they can get a big percentage of your company. And so then what happens is that investment makes your company worth a lot more. It's worth, at the least, it's worth whatever it was plus the angel investment. But then the angel investment does what it's supposed to do. It gives you the money that you need to grow. So you're 10 times as big, you're 20 times as big, your company's worth 20 times as much. So the next person that invests for the same amount of money only gets 1/20th as much stock. So you'll be able to raise a lot more money with a lot less stock. And that's the progression. They call Series A. It's the next level of stock, and then Series B. And so that's the way that your company grows. And I want to say, but at all times, remember this important fact. Investors get their money back when you sell the company. So investors at all times are thinking, I want my money back. And so they're going to be thinking, I don't know if the company's going to grow that much. I think it's grown as much as it can. I think the market's flat. I don't think it's going to grow anymore. You need to sell the company. And if you have, the investors have more stock than you do, that's just tough beans. They're going to sell the company, and that's that. If the
So Don,
investors
can you speak, I think, for people who are listening, how do you make sure that you don't put yourself in a position where the angel investor has all of the control and you do lose your company? Is that the risk of working with angel investors?
Yeah, well, investors in general, because they gang up, because the angel investor may have a portion, and then you get another investor for Series A, and then you get another investor, and all the investors together can gang up and outnumber you.
All right,
and
so
that's always a danger.
well,
And
can I just, and I want to interrupt you because I know there are people who want to know the answer to this. I had a gentleman who said to me, Christmas, 2 days before Christmas, he got called in by his angel investor. He thought that they were going to talk to him about further investing in the company. They gave him a pink slip. He had invented a device, a medical piece of equipment, and they gave him a pink slip 2 weeks before Christmas. And can you speak to the challenges that the fear? I mean, it's, you need the help, but you don't want anybody stealing from you. How do you make sure that angel investors don't become nightmare investors?
that's definitely a wonderful question. And That's why right at the beginning, when I said angels can become devils, and that's exactly what I was meaning. Ideally, you you can make sure that you have more stock than your angel investors, that you and the only way that you can do that is um, to basically have your company make enough money that it can grow without getting more investment. And the and that, sometimes you just can't. Sometimes you can, and sometimes you just can't. And so that's just a risk you're taking. There's really nothing you can do about it. And so the other thing that you can do is, really try and vet your investors. I mean, that's a really interesting thing. You be careful, don't take money from anyone. Go around and check. Make sure that the people have good reputations, that they aren't, you know, pe- just like they check you out, you check them out. People have reputations. You can find out what people are. I mean, things to really flag are things like she just mentioned, and another thing to flag is one is what we call scared money. Like if you get somebody who's investing and they're really going out on a limb investing, like they don't really have enough money to be investing in you, then they're going to be freaking out all the time. Anytime anything looks a little bit scary, they're going to be freaking out, and they're going to be bugging you and calling you, and calling all their friends and trying to figure out what they can do to micromanage you. And some eh, another thing that you really need to look out for is ones that really want to micromanage you. Because if you get people in there that are like every day calling you and telling you what they think you should do and things like that, it just you can't think, and it makes it really difficult to do. And then um so you can find out that about people. And then on the plus side, the kinds of people that are really good are people who have connections to to more money. So basically, when I said about the Series A, the next level, when your company starts to get to be worth something, so that you can sell a little bit of stock and get a lot of money, who's going to buy that little bit of stock? That's the point where you start going to venture capitalists who have lots of money. And but venture capitalists are difficult. And so if you have an angel investor that has really good connections to venture capitalists and more money, then they can just pick up the phone and make it happen. So again, they have reputations. How do you find out people's reputations?
My
Well,
next question.
that's where something like African Trade Network really starts to help. It's networking.
Yeah.
It's you just have to get out and talk to people. There's absolutely no other way to do it, because angels are there's not a lot of there aren't magazines about that talk about angels. Angels are private investors who, some of them, keep very quiet. There are organizations, angel network organizations, but there's rules in these angel network organizations. Is that you have to be to join them, you have to be a qualified investor. And people sneak in all the time, but there aren't qualified investors, so you can sneak in. But
So
but
what does it mean to be a
I
qualified
was about
investor?
to say, you
Okay.
have to have $1 million in the bank, that, not counting your house, that you of disposable money, basically. Or you have to have very good knowledge of the thing. Like there's licenses that allow you to trade securities, that are not public securities, and means that you have enough knowledge. And the reason for that is years ago, back before the Great Depression, people would just create companies that were worthless and sell stock in them, and just take people to the cleaners. And so the they don't the stock that people are selling to angel investors is not regulated by the SEC or anything like that. So there's a potential that somebody could be selling stock to people that was, just really very fraudulent. And so they want to kind of have a barrier there so that normal people don't wind up, putting their life savings into something that's completely bogus. And that's why those rules exist. So anyway, what I want to talk about now, a little bit before we the hours up. I mean, time's up for we had some questions as we went along, which is fabulous. I just want to briefly look at when you're talking to angel investors or venture capitalists. Usually, what you do is you have what's called a pitch deck, and it's a simple, very simple. Keep it simple. Description of your company. And I have an example one here that from Sequoia. The most important thing is, and this applies not just to tech startups, to anything, is what problem are you, you tell them what the company's trying to do, but the first question that you have is, what is the problem that you're trying to solve? A lot of, especially in tech, you won't run into this as much with trade, and because it's a lot more. It could be. I can see where you could be doing things just because you can. And in engineering, it's really common for people to just do things because they think it's cool, and it doesn't really serve any practical purpose. And so the most important thing is, what problem are you trying to solve? Like, why would people want what you have? And then the solution that you have. And then the why now part is timing is everything. If Steve Jobs had invented the personal computer 2 years before he did, or 2 years later, 2 years before, nobody would have, they just wouldn't get it. And 2 years later, somebody else would have already done it. I mean, it was just, it was the right time. And then you have to say, well, how many people are going to want this? You could solve a problem for that would only a very, very few people have, and that wouldn't be particularly interesting. And then you have to talk about who else is solving the problem. If Microsoft is solving the same problem, or Unilever or some gigantic company is solving the same problem, then you can't really compete with them. But if you can show that no one else has solved this problem, then that's very compelling. And then you start describing what your product actually is. So usually you kind of think the other way, like the first thing you do is start describing your product. And I have seen hundreds of people who start describing their product, and that's not the way to go. And then you describe how you're going to make money doing it, which is absolutely, I mean, businesses are about making money. I mean, that's what they're for. And this one, the team, is incredibly important. And two things on the team that people miss often are the person who's going to keep track of the money. You've got to have somebody on the team that's credible on the money. And then you've got to have somebody that's credible on the sales and marketing. And oftentimes people come and they say, well, we've got this great product, and we say, well, how are you going to sell it? How are you going to get it to people? And they say, well, we're going to make a website, and we're going to do email blasts and blah, 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 like that. and you just kind of go, well, I mean, that's great, and it's very hopeful. But other ones say, well, I know this person at this company, and I know this person at this company, and I know this person at this company, and I've talked to them, and they need the product, and I have a personal relationship with them, and so as soon as we make the product, I have customers. And you hear that, and you go, oh, okay, well, that's pretty exciting. And so having people like that on your team really make a difference. And so and the team, the feeling that people have for the team is really incredibly important. And then you have to work it out. You have to somebody called me about, I don't know, in the last year, and he was explaining this product to me, and I asked him, I said, well, how much does it cost to make? And he actually had a product that cost more to make than he was selling it for. I, 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 how could anybody think you could have a business where it costs more to make the product than you're selling it for? I mean, that's absolutely makes no sense whatsoever. But those those are the kinds of things you have to do.
Thank you all so much for joining us. We are discussing angel funding and the pros and cons of what you need to do with your business, and how you need to do as much investigating of the people with the money as they do of you as you put together your deck. Your deck essentially is just your story. What is the story of your company, and how do you sell you? How do you make sure that you walk in with a level of confidence? Because if you're not confident in what you're doing, it is really difficult to get other people to be confident in what you're doing either.
All I want to say is remember when you're doing this, like if you're excited about this, like I'll just tell one brief thing is we had this kid that came in and he said, my girlfriend had this problem and I knew I could write a program that would solve this problem. And I wrote this program, and after she started using it, everyone in all of my friends in college, everybody started using it. So I had a roommate who was getting an MBA, and we decided to start this company. And you're listening to that and you're going, okay, the guy's smart enough to get a finance person. He's got this thing that people like. It solves a problem. I mean, and he's enthusiastic. Somebody like that, you just kind of, you're drawn to. That's the kind of thing that you want to invest in. I mean, that's the kind of story. And the pitch deck is there. I mean, those are the elements of it. But the story that he told was so compelling that everyone was, he walked out of the room and we discussed him and everybody was incredibly excited about him. So, I mean, that's just an example of how it really works together to sell yourself. And so I'd take questions.
Don, thank you so much for sharing your expertise with our audience today.
And we have so many things coming up. We have classes that we will start in September on an ongoing basis. We will be doing a conference coming up next year, October of 2023. We have a trip scheduled to South Africa, September 2023. And so we have a lot of exciting things. We have multiple events that are taking place throughout the year leading up to the conference. And we're excited about that. We're just excited that you're here today, and we want to encourage you to go to our website at www.africantradenetwork.net and become a member. Become a member and become a part of this network, and we will help each other and the continent of Africa and America. So thank you again. And we look forward to meeting with you next week on Monday at 10 o'clock. Every Monday at 10 o'clock, we have our Zoom meeting, and it is extremely exciting. So please come to that meeting. Thank you again for coming. Blessings to you.